Hi there, a very good morning, good afternoon to all of you, depending on wherever you're watching me. This Simply Stocks, and I'm here with another video. And this time, this video is completely dedicated towards the market. I believe this market is headed much lower from here. And that's why I made this video just to make you understand what I feel about where the Nifty is headed. I've not analyzed the mid or small cap indexes, but as you understand, if the Nifty is headed lower, then those indices in all probabilities would be headed lower. So let's discuss about the markets as a whole because there has been a lot of selling from the FIIs over the last few days and the markets have fallen some 4 5%. So will this be it or there is more to come? So let's discuss about that. Let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. I'm not a member of the NSC and BSC, and that I'm not an official portfolio advisor. So, whatever decisions with respect to investments or trading you take, kindly do consult your financial advisor before doing that. So before I talk about the markets, a small request that kindly support me on Patreon. And once you do that, let me grow the channel, help you also ask me questions, seek out answers in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and a number of podcasts on markets, on analysis on different industries, companies, etc. will be there. There's an updated watch list, which is actually my portfolio, which is of around 30 to 35 stocks that I keep putting that up, and whatever queries that you'll be having, I'll be answering that. You can get a yearly WhatsApp membership as well. If you don't want a Patreon membership or you're not able to get a membership on Patreon, you can get a yearly membership on WhatsApp for $100. Now to discuss about the markets, let me take you to the website here on TradingView. So this is the Nifty chart, and we'll primarily discuss about the chart of the Nifty and where it is headed, plus the PE of the Nifty that I discuss. You can say from time to time I do discuss about how the PE is. And over the last few months, you would have understood that I have always discussed that Nifty is not that expensive and it can go up to 26,000, 27,000, 26,500. Now, if you look at it, what is the current PE of the Nifty? Where are we at the moment? So we are at 23 and a half times. At the moment, we have fallen all the way from 24 and a half nearly to 23 and a half times. Now, what is concerning here is that the earnings of Nifty, which was expected to be closer to 1150, 1160 rupees, currently the earnings are around 1063 rupees. Now, last year the earnings were 980 rupees for the Nifty 50, you can say, companies, and people projected a decent jump. So, if I take 1160 as a projection, so that's a 180 rupee, 180 point jump on that 980. So that's an 18-19% growth. That's what analysts were baking in February, January, February of this year, and that's why the surge took place in the market. Now, what it has transpired that it looks like we are going to have earnings of around 1100 to 1110 rupees. So 1110, if I deduct 980 from there, that's means higher in terms of earnings of let's say 130 rupees higher on 980. That's a growth of around 13%. Now where this 13% number has come out, basically it has come out from the GDP data. 6.7% growth on the GDP, plus you will have 5% inflation. That's around 11.7, and if you add around 1% or 1.3% of corporate growth that happens, or operating profit growth that happens in companies normally, so that's around 12 and a half, 13%. So that is what now analysts are taking in, that okay, we could have at best 13% growth. I have seen analysts talking of 10-11% growth, which would be even more detrimental. So taking that into account, if we take 1110 rupees Nifty earnings for FY25, then at that level, on that level at around 25,000. We are currently trading at around 22 and a half times, which is not ultra expensive, which is not cheap either. And so from here on in, even fundamentally speaking, since there has been a lot of selling in the market over the last 6, 7 trading sessions or 4, 5 trading sessions, we could see a bounce back. Now, how far that bounce back can go, in my opinion, that bounce back, we'll discuss about that bounce back, but I believe that 25,600, 700 is possible in the next week or 2 weeks time. We'll discuss technically in a bit. But if we take the EPS numbers further, so if you look at the PE and on an average how the PE dips and where it settles down, so it's normally around 22 times, 22.3 times is where the markets normally has settled down over the last 1 year or so. So you look at here, everywhere there is 22.3 times earnings where the market bounces back again. So current, what is the current EPS? Let's come back to that. That is 1063. If I take 22.3 times of that, we come to a level of 23,700. So I believe that there could be a decent fall from current levels, and which is around 1300 points, even from 25,000 levels, which is around, there could be a 5% dip further in the market, but that may not come immediately. So as I mentioned, we could go up to 3% and then fall. And that is where I would like to warn traders, not investors. I think investors can keep on buying shares at these levels, at lower levels, at 24,000. But for traders, it is paramount that we need to understand as to how low the market could go. Could be a situation the market may not fall, but I could see that we could be headed towards below 24,000 levels based on the EPS number. So 1063 into you can say 22.3, we are headed to 23,700. Why this number is very interesting is because if I take earnings of FY26 in account, so 1110 rupees for FY25, we have understood that 1063 is the current earnings after Q1 results. 1110 is expected for you can say 2025. If I extrapolate that by 13%, and I believe 12-13% growth is possible for the index next year, we are headed to around 1250 rupees. On 1250, normally on a 1 year forward basis, the market trades at, when the market dips, the market normally trades at around 19 times or somewhere around that, and that comes out to be 23,700. So on a 1 year forward basis, also this number aligns. So I believe around 23,500, 23,800 is where the market may settle down and eventually give a strong bounce back. So I'm not saying that we are going to fall 1300 points more in the next week. What I'm trying to say is that over the next 1 month, with different reasons, one is the US elections, the other is the crude prices, the third is the war we are seeing in the Middle East, the fourth is muted Q2 results. I'm not expecting a lot of things in Q2. So these are the 4, 5 things I believe that could end up seeing this market go down. And you need to understand that Nifty has gone up sharply from June levels. In June, we made a dip towards say 21,280 intraday, and then we moved up and we have sharply moved up. There have been a little bit of correction in August, and then we moved up further. So if you take that into account, that over the last probably 5 months, over the last 4, 5 months, we have moved up sharply from around 21,000 to 25, 26,000. It is paramount that we see a decent correction. So decent correction, in my opinion, is around 23,700. What needs to be done? I believe that what I'll be doing, I can tell you about that. I might exit all my positions. I am fully invested into the market, so I might exit all my positions around 25,600, 700 if I get a bounce. On the other hand, If there is a situation that the market falls and we go to 24,500 instead of going up from here, we might open higher tomorrow. But if we go down from here, say by around 2-3%, then I am not going to do anything, because I believe that 23,700 will act major support. Now we come to the technical part. So if you look at the 50 DMA, it's around 25,000, 25,070, and we're just below that. We are going to open higher, hopefully, on Monday, around 25,200. That's what the SGX is saying. So we may hold this 25,070 levels. If we don't, we might fall, and I'm looking straight away to the 200 DMA. 200 DMA is this dark blue line, or the purple line, which is here. 23,140 is the current 200 DMA. I believe over the next 20 days, or 15-20 trading sessions, and that's how long I believe this correction could continue. We could see this level go up to 23,800 or so, 23,700, 800, and that is exactly where the market could find support when the market falls from these 25,000 levels. So this also aligns with the fact that the market could fall 5% from here. Going to 200 DMA, if we stretch this further, I don't think that in the recent past we have seen the market go or breach that 200 DMA levels. We need to go all the way back to, I think, 2023 March, when we breached this 200 DMA with a vengeance, and we came back. So I think we are headed there. At that point of time in 23 March, we had a correction from 2021 October. That was an 18-month correction. This time around, we might be having from this 50 DMA an 18-day correction. That's how this market is behaving. So we are headed to 200 DMA. Two of the things a trader could do, again, investors can keep on buying at these levels, at 24,500, at 24,000 levels. A trader could look to sell on a bounce back. Now, why I'm saying a bounce back could be till 25,600 is, if you look at here, the low was 25,800, around there on 30th September, and then we had on 1st of October a low of 25,740, and then a gap down. So this gap needs to be filled. It's the same way as the gap when the market gaps up or the stock gaps up, the gap gets filled. In the same manner, when the market gaps down and there is some bounce back, then that gap gets filled. So I believe that there is a very good chance that we go to 25,650, 700, and then a selling, then massive selling comes in. Why I'm saying that is because of the kind of, you can say, RSI, RSI, the way the RSI has dipped from around 77 all the way to 38, 37, 38, and then we had a little bit of bounce back. So I think this RSI will move up. There will be a bounce back because of the kind of heavy selling we have seen in the last 2-3 days. And so 25,500 is your 20 DMA that should be taken out, and we should go higher from there. 25,650, 700 will come in, and if you are not in heavy losses, take out all your positions. That's what could be done, and wait for a correction. There could be a situation that will go to 26,000, but having said that, if we go to 26,000 on the index, then, as I said, on the current earnings basis will be around 24 and a half times, which is extremely stretched, because if you look at the PE again, the higher we have gone apart from these levels that we went, so this was 24.4 times, you see here, and what calculation comes out to be 24.45. So I don't see the market going beyond 26,000 at the moment. I see a decent correction, minimum to 23,700. We could go even lower from there. So 25,600, 700 is where the selling could take place, a lot of supply, and then a decent correction for the next 3 weeks into the market could happen similar to what happened in July. So in July, on July 5th, 6th, 7th, the RSI was uh, greatly up, if you see here, and then the fall began. So around here we were around 24,800 and all going merrily, and then a sharp fall began, then a rally, and then a fall. So this fall is reminiscent to the fall we have seen here. There is a bounce back that we see here if you see closely from say July 25th, 4 5 days of bounce back and then heavy selling because of any reason. There were different reasons for this, but eventually we fell, and then we found support at 50 DMA and we went up. But here there could be a situation, since the 50 DMA is breached already, that we see a bounce back and then eventually we go to 200 DMA because we need such corrections. There has been 1.5 years since we hit that 200 DMA and breached that. I think we could be headed there again. So if you're not down a lot on your portfolio and you see green at 25,600, 700, take out all your positions, wait for a correction, and probably 23,700 would be a good level to start trading from a 2 to 3 months perspective. So that's my opinion. Where the market could go higher from there, say suppose 23,500 we make a bottom, and we also have the Q2 earnings coming out, so hopefully we'll notch higher in terms of EPS to 1078. So around 22 21.8 times we'll be trading at that point of time. Then how far can we go? So by January, February, since we'll bake in this 1110 EPS, we should be around 27,200, levels. So after falling to 23,700, which is a decent correction, which is a 9 to 10% correction from the top, we could make the next stop at around 27,200, which is 1,000 points higher than the current high that we have made. So that is where we are going to, as traders, going to make money if we are you can say trading positionally, and then we will also stave off everything with respect to the Q2 earnings. So we'll be in cash while the Q2 earnings comes out, because I am not very confident on the earnings front at the moment because of the high base that we have had last year, and the fact that the crude is up, and the earnings are not that great for Q1 as well. So this is my video on the markets. Please like and subscribe my channel and hit the bell icon so you can get my video straight away when I put it on. Thanks a lot.